equity and policies towards income and wealth redistribution. So it's simply about wealth and income. And when we talk about wealth and income, simply talking about the value of assets and the ability of people to earn more. That is how wealth is developed. But the introduction says equity versus efficiency. There's equity because we all have fair redistribution. That is equity. We all have access to the same income, access to the same information, access to the same values. That is equity. And when it comes to efficiency, it simply means you are able to minimize your cost, or you are able to use resources to the fullest capacity, the scarce resources. So the point about redistribution of income and wealth is how we are able to find a balance between equity and efficiency. So introduction. Efficiency implies to how limited resources are used in the best possible way. That is efficiency. The best use of resources. The best use of scarce resources. The best use of scarce resources. That is efficiency. So, but for equity, equity simply means a distribution that is fair and justifiable. A distribution that is what? Fair and just. Fair and just. That is equity. Then, how do we strike a balance between efficiency and equity? It is difficult because those factors that bring about equity affect efficiency, and those factors that bring about efficiency affect equity. But before we go into that, what are the types of equity we have? We have horizontal equity and vertical equity. Why do we call it horizontal equity? We call it horizontal equity because it's basically we paying the same amount of tax as a consumer and any other person who is not even consuming but has the same circumstances as we have. We are in the same situation, either as a consumer or as any economic agent. We pay the same value in tax. That is horizontal. When it comes to vertical, it is vertical because there's fair apportionment of tax between the rich and the poor. Whatever the poor are paying is justified. Whatever the rich are paying is justified. That is what we call vertical equity. Do you understand the difference between horizontal and vertical?
Yeah.
Horizontal is about you as a consumer paying the same level of tax as any other person that has the same situation as you do.
Yeah, but vertical is between the classes.
Yes, and it is fair and just. That is vertical. So efficiency and equity are microeconomic objectives, but the policies used brings about conflict as in to increase efficiency there will be lack of equity, and to increase equity it brings about inefficiency. So how does this work? There's conflict. There's conflict, which is trade-off. Between efficiency and equity.
Yeah.
So look at the example I make here. For example, when the product is scarce, there's a scarce resources. And whenever there's a scarce resources, it is expected that the price of the product increases. Yes or no?
Yes.
So if the price increases, those that have high income will still be able to afford them. The people that are going to be worse off are those with low income. Because their purchasing power reduces. Their purchasing power reduces. So, it simply means goods are scarce. Firms want to try to produce them. But in the course of producing them, they have to increase the price. So increasing the price means some people will be able to buy, others won't be able to buy. So a higher price will not bring about income equity because some people have access to that information or those products, others don't have access to it. Not because it's not available, but because the price is expensive. Do you get it now? The product is scarce. It is expected that the price increases. So for those who can buy, we're going to produce it but at the price. So those who can afford it are those who have high income.
Or high wealth.
Do you get it? So not that the product is scarce. If you have the money, you can buy. But you are unable to buy it because you don't have the income. get it?
Yeah.
So that's about equity. So there's efficiency because we're able to produce the product. We're able to find a way around it to produce the product. But there's inequity. There's no equity because we cannot have access to it based on the fact that our level of income is less compared to others. That's the first one. Also, those who work hard and take risks are likely to be better off than others. When you take a risk, you create a business. Because you are creating the products or the service, others are sitting back, not taking that risk, allows you to be ahead of them. So you taking a risk to produce a product means others who cannot take the risk will buy the product from you. That makes you to have more income than those who did not take the risk.
Yeah.
Do you get it?
Yeah.
So you can't talk about equity here because you don't want to take the risk, and others have taken the risk. You might not be taking that risk because you don't have enough you are not financially capable to take the risk, or maybe you don't have enough information to know more about it before taking the risk.
That's right.
So it simply means whatever we think about equity will make it difficult for efficiency, and whatever we think about efficiency makes equity difficult.
Okay, now I understand what you meant.
Do you get it now? So there is always going to be a trade-off between equity and efficiency. So that is where we have government intervention. Government wants equity. Government wants to redistribute income. But to redistribute income, government have to be on the forefront. So it is a government thing, not individual things or not firms things.
So you're telling by individual, the government will restrict it, basically, because, sorry, what I meant to say is that this is linked to the free market stuff, because individuals are the people who are going to take care of necessity stuff. But the government will step in to make sure that the equity is being achieved as well.
The free markets will think mostly of not equity.
Yeah, equity is a public sector to achieve.
So the free market will not think about equity. It's not their business. Yeah. Because when there is equity, there's no gain. There's no gain in equity. There's no gain. Because why do we say those who work hard and take risk are to be better off? This is the free market mindset. We've been one step ahead of others. That gives us the ability to have more income, more access to information than others. And that is what we sell to those who don't have access. So the free market doesn't think about equity. Equity will come from the planned system or the government. So that's why government must come up with policies that would encourage you and I to take the risk like others. Do you get it?
Yeah.
So look at as a result, for equal distribution of income to exist, government must create incentives that will improve efficiency. So government must come up with incentives that will improve efficiency. As this will allow people to take more risk and earn more income to improve their living standards. So equity is about improving your living standards. The price is $5 for the product. I can afford it, you can afford it. That is equity.
Yeah.
But you can afford it, I cannot afford it. There's no equity there. That is the point we're talking about here. So government needs to come up with policies that would encourage people to take risk as others who have taken the risk, so that they can earn more income and improve their living standard. Incentives such as grants, tax credits, low interest on loans may improve efficiency and bring about low prices, which may in turn allow equity. So I don't want to take the risk because the bank taking a loan to start the project or the business involves high interest rates. But now the interest rate is low. It encourages me to take a loan. So whatever business you're doing, I can do it as well because I have access to finance. Government is giving grants to people. Oh, financial help from government. Government is giving money to start up businesses, to individuals who have ambition.
Do subsidies often count as incentives?
As what?
Do
The debt?
subsidies often count as incentives?
Incentives what?
Do subsidies
Subsidy.
often count as incentives?
Well, if tax credit is an incentive, subsidy will be an incentive too.
Alright.
But mostly we're looking at the perspective of consumers, perspective of those who don't have the ability to. You don't even subsidize for them. You try to find a way to encourage them to have access to money. Subsidy does not give you money. It only reduces your price. But with tax credit, with grants, low interest or loans, you have access to physical cash. That gives you the courage to want to invest. Do you get it?
Yeah.
So these are things government have to do to ensure that equity and efficiency work hand in hand. Without government incentives, there's always going to be trade-off between equity and efficiency. Not because it is not deliberate. It is not deliberate, but that is the reality. You can't be efficient at the same time have equity. Look at the free market, yes?
So, for example, efficiency is like higher economic growth. But sometimes the only people who benefit from economic growth are the people who hoard the wealth. Right?
Yeah. So, for us to have the same access, we need government intervention.
Yes.
We need it. We can't. It's difficult for us to have access. Without government intervention, it is difficult. That's why government is more of social welfare. The free market is about profit maximization.
That's the conflict.
That's the concept.
Yeah, it was conflict incentives.
Yes, they are conflicts because here is about everybody. Here is about those who can afford it. So here higher prices, here lower prices, and that is why here the price is always at MC. Here the price MC is always at MR.
Yeah.
It's different. Low cost here, low price here, higher price here. Higher price will not bring about equity. It won't. Profit maximization thinks more of efficiency, not equity. But social welfare thinks about equity because it's about the society. Government wants everybody to have the same access, have access to the same information, to the same benefits, irrespective of your location. Whatever you have in Tripoli, you have it in Tahuna, you have it in Soma, in as much as it's a Libyan state, it's a Libyan environment. That is equity. But the free market doesn't think about that. Why don't we have ISM in Tahuna?
Because it's different markets. But the difference between equity and equality.
What?
There's a difference between equity and equality.
Inequality.
No, there is a difference between equity and equality.
Yes, equality simply means
Equal distribution. Equity is about fair distribution.
fair, yes.
Because
So it's not about having the same. You can't. But there's equity because everything that has been happening between you and I is fair and just. It's not equality.
how can we judge if something was fair and just?
How can we know?
How can we judge it based off of some data whether an assessment the government was fair and just?
How can we know? We can't because, okay, look at it this way. The price of a product is 5. Everybody can afford it. That is equity, that is justifiable. But if the price is 5, some cannot afford it. It's different. You just have to work. They said you need to take a risk. Some people are unable to take the risk because they don't have the same access as you do.
Different.
Do you get it? The aim is not, the objective is not to make everybody richer. But the objective is to ensure that everybody have the same access.
You got basically to lower the GDP coefficient.
Yes. it encourages you to take risk. Instead of folding your hands and saying, I can't do this because I don't have access to these things. At the end of it all, it's about what? It allows people to take more risk and earn more income to improve their living standards. Their living standards. We're not going to have the same level of living standard. No, we can't. But everyone is able to afford the same thing. That is equity. Equality is, when we talk about equality, we talk about equality probably with law. Everyone is equal with law. Like no one is above the law. That's equality.
Yeah,
but here, you need to try and get something done.
True. I mean, think about it. Equality, for the side economics, would be objectively unfair because people who worked harder are getting less benefits from it.
So, but here, government will just try to encourage you to improve your life.
Yeah.
So instead of government not trying, these are those things government will try to ensure that you can also have access. Take the risk and enjoy the benefits.